Hi everyone, welcome back to the Wild Wolf Financial Team. This is Jem and I'll be your financial analyst in gold. So, we have finally reached the last trading day of the week. Today is December the 11th and I will be discussing a few points in regards to gold. Firstly, let's look back at what's happened throughout the week. We've seen a significant plunge in the gold and a significant rise in the gold. So we have witnessed more than $50 of a price range. Now today I'll be discussing a few other points. As previously I mentioned about the vaccine, the COVID-19 vaccine. Today will be it'll be based more on fundamental analysis. And I'd like to mention a few points, such as what happened the other day by Boris Johnson announcing about the post-Brexit deal, and the U.S. Treasury Secretary Mnuchin announcing the stimulus package of more than $916 billion. So we have seen a very strong fluctuation in the market, and we have also come across a pattern of head and shoulders. So as a matter of fact, we have witnessed it twice. So not only on the beginning trading day of the week, but also today as the last trading day of the week. So I will be discussing that further in details when I open my charts. But a few other points that is to mention is that unemployment claims once again is negative, and it was lower than expected, and this plays a major impact on the U.S. economy because currently the U.S. economy is currently vulnerable, and it is not looking too good. But I will get into details regarding my charts. So let me get my charts open up here. I will be discussing mainly on the hourly chart. So as I mentioned previously of the rise and the plunge in the gold price, as you can see here, we have witnessed the price go up this high to highs of $1875 per ounce. Now, when I mentioned the head and shoulders, we did witness a head and shoulders right here, but the right shoulder seems to be a little bit weak. So we can see that there were a lot of sellers involved and they were trying to push the price down lower. But it did not sustain too long, and it did have a more bullish direction in this area. But nonetheless, now on the hourly chart, we can see that the head and shoulders was formed here, not clearly, but it does give an indication that the prices will fall further. And this week was not really a week of strong impact economic data. It was only the beginning of the week where we were expecting something to come up, but nothing was announced. But the breaking news played a major impact. So as we can see in this section here, we can see how the prices plunged down and tried to correct itself. And this was, as I mentioned earlier on, due to the post-Brexit announcement by Boris Johnson and U.S. Treasury Secretary Mr. Mnuchin. Now, this is where prices did fall back. So this is where around $25, there was an impact of $25 going downwards. Now we can see here, gold did go lower, touching lowers of 1825. So it did touch and it did rebound once again, trying to correct itself to go to the higher end. But nonetheless, the gold was still in the negative zone. Now, as we can see here, this area once again is also called the head and shoulders. Now, at the end of the trend, of the pattern, as a matter of fact, we can expect gold to go down. But as I mentioned previously, due to the breaking news, prices did highly fluctuate. So it was a very high, it was a highly volatile week, to be more frank. as we can see the difference from compared to past week and till today, this is a significant drop compared to what's happened in the previous month, which has dropped $100. So gold is trying to rise up, but due to all the updated economic data, gold is losing its value currently. But nonetheless, it is still looking to be trying to go up again. Now, the head and shoulders here, once again, the right shoulder looks weak again. This is because the bulls tried to take over. So they did try to get in charge to push the gold back up. And at this range, the gold was sitting on a support at $1825, whereas the resistance level is at $1852. So above here will be considered the positive zone. Now, as I mentioned about the unemployment claims, now this area here had a tremendous impact, as you can see right here. This is because more than 100,000 claims were announced on the unemployment claim. So this is a significant difference compared to what they were expecting, because 723,000 was expected, but it was higher than forecasted. So we are talking about 130,000 more, and the amount that was shown was 853,000. So now we can see that the impact of this has given gold a very good impact. So as this made the currency more vulnerable, this gave gold the opportunity to rise higher. And as it went higher, as gold did gain its value, now we do expect a lot of buyers involved there. So there was a very strong very strong bullish movement, as you can see in this section. So at this area, we have seen a rise and fall of a matter of $16. And ever since, it has been fluctuating. So I would say this week is or was a highly volatile week. As we can see previously with the bullish trend, basically the bears stole the week of the bulls. So this is what we can see from our charts here. Now, if I go back on the daily chart, we can see here that gold is looking more on the negative zone. It is looking more bearish. So this does explain to us in what's happening in the market. Now at this point, we can expect gold to break out once again, as it did previously. That was a few days back, and within this trading week. Now, if it does break, we are expecting gold to have the next resistance at $1,830, where the support will be at 1,800. So this is what will happen in case gold does follow the head and shoulders pattern and does continue following its trend, as we can see in this section. So the upcoming economic data due today is the core PPI and the PPI. So as I mentioned about the core CPI positive, now this made in this area, this was more than expected. So this is what was forecasted. This gave a negative impact on the gold. Now in this case, what happens is that it accounts for a majority of overall inflation. So I am referring to the word inflation because it is important as currency valuation. So what happens here is that because rising prices lead the central bank to practically raise interest rates. So this is something to consider, and this will have an impact on the market, as we have seen, as I've shown you previously on the charts. And moving on, so gold currently is looking highly volatile. we are expecting it to either go up or either go down. But in case it does follow the trend of the head and shoulders. This may lead to a more bearish momentum, but nothing is sure as of yet, as I mentioned previously, of what's happening with the economy. Now, basically, gold is still in the negative zone. So I would highly recommend for all our traders and investors to please wait for our signal. And this way we can be more careful in placing our trades, because there is currently high risks in placing trades. We don't know exactly which direction the market is heading towards, even though it is looking more bearish, as I've shown you previously on the daily chart. But nonetheless, I hope you have enjoyed our show. And if you did like our show, please give us a thumbs up. And please do not forget to subscribe. And we wish you all a great weekend ahead. And we'll be updating you on Monday, the first trading day of the week. So please do stay tuned to more of our updates soon. Have a great day ahead.